I want to quickly talk to you about business credit for a new business with no personal guarantee and no assets. How to get approved step by step. Welcome back, folks, to another edition of the Awesome Sir Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you were to ask me, if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to explain to you quickly how to get business credit for a new business with no personal guarantee and no assets. And let me quickly explain a few things. So when we talk about business credit for a new business with no PG and no assets, we talk fundamentally about beefing up the balance sheet of your startup. Also called a statement of financial position or a statement of financial condition. A balance sheet is the accounting report that shows a company's or a person's assets, debts, and net worth. So in this video, I will show you step by step the kind of credit you should apply for based on the business stage that you're currently in on the balance sheet. So at the end of this video, here is the balance sheet that you should have. Here is the balance sheet that our hypothetical business should have. Let that information sink in. So the first step here is the cash infusion. Okay, you want to start by seeding your startup with some capital. So this could be $1,000, $2,000, $5,000, or $10,000, or even more, depending on your needs. You need cash to start your business, and you cannot get everything from business credit. If you have a personal credit card or you want to take out a loan in order to have the funds necessary to seed the business, just do it. Okay, just do it. And if you have good or great personal credit, that's a big plus. Otherwise, you could still be okay, not a problem. So when we say business credit with no personal guarantee and no assets, we actually mean business credit with no personal guarantee, but a little bit of cash, a little bit of startup cash, because the cash, you need cash to take care of initial activities. All right. So beside that cash, you need a legitimate business with an EIN and all the licenses, permits applicable to your industry. Very important. You got to have a business plan, my friend. You need to have a business plan. This is important. And you also need to have projected financial statements. So one thing you need to understand is that when we talk about financial statements, of course, you got to have the balance sheet. This is one accounting report, but you need three more. You need to have a projected income statement. You need to have a balance sheet, of course. You need to have a statement of cash flows, and you need to have a statement of owner's equity. And please, you want to spend money to write a compelling business plan. On YouTube and social media in general, people tell you, hey, listen, you can write a business plan yourself. My friend, let me talk to you right now. If you have no knack for writing business literature, you want to outsource this task, okay? I don't care how good you are. If this is not your specialty, you want to outsource it. You can get a good business plan for $100, $200. Don't try to buy a template online and try to do things yourself. A business plan, it's very, very important. It is quintessential if you're trying to get business credit for your new business with no personal guarantee and no asset, okay? Okay, the balance sheet on day one shows the cash that you put in the business. You can see on the screen right now, we put $10,000 in cash hypothetically, and we also have $10,000 in the owner's equity section. Step number two, you want to seek computer equipment, okay? Now, you want to find lenders that do that actually lend for office equipment. You want to find lenders that do office equipment financing or leasing. You want to fill out the application and send it to them along with your business plan and the projected financial statements, okay? And here are we have found 3 top lenders and or leasing companies for office equipment for startups and very young business. So we're talking about companies that have less than 18 months old, okay? First, we have National Funding. And the maximum loan amount is $100,000. The minimum credit score goes from 600 to 650. The APR 8%, and the repayment term up to 5 years. The payment frequency monthly. The annual revenue up to 3 days. Okay. The down payment 20%, or some cases they will go to 0%. It really depends. And actually, there is no time in business because they will accept startups as well. So this is really good. And if you have a FICO score that goes from 600 to 650, that's fine. Sometimes they even will accept you if you have a 575, okay? Then we have National Business Capital. And the maximum loan amount is 100,000. Maximum credit score, you have 650. And the annual the APR 8%, the down payment sometimes 10 to 20%, and the repayment term up to 5 years. Okay, time in business, no minimum. One thing I want to say here is that National Business Capital is also business friendly. They are startup friendly, rather. Startup friendly. This is really good. And the third company I want to talk to you about is eLease. So here you can lease up to $500,000 worth of equipment. The minimum credit score is 500. The APR range 6%, and the down payment 5 to 10%. So this is the kind of cash I was talking to you about earlier. You need to have cash to put down down payments in case you want to lease equipment. Okay, so this is important. So eLease offers equipment leases up to $500,000 with terms of up to 5 years. All right, so eLease is actually a viable option for startups that are tight on cash or have poor credit, given that there is no minimum time in business requirements nor a minimum revenue requirements. So each application is reviewed on a case-by-case basis. So I want you to see right now on the screen. Here is a balance sheet on day 2. You have total assets, cash, and computer and office equipment. And then for the total liability, you have a short-term loan or a long-term, depending on the situation, with owner's equity. So we have our accounting equation that is valid on both sides, 15,000, 15,000. And getting approved for an equipment loan as a startup can be difficult. However, if you do things right and you follow the rules that I just told you, you need to, if you have a business plan, you can be approved, okay? So the balance sheet on day 2 shows cash and office equipment. You can see that on the asset side, and the corresponding items on the liability and owner's equity side. Now, let me give you a quick disclaimer here, folks. This is really important. For those of you who are well versed in accounting, I just want to say that I am oversimplifying a process that can be normally complex. Okay, and I am aware of that. So for example, for simplicity's sake, I'm not talking about straight line depreciation, section 179 deductions on the asset sides, as well as interest payable on the liability side. I understand all these things, okay? In case we go with the leased assets, I'm also intentionally not bothering with the financial reporting implications of an operating lease versus a capital lease, okay? All those topics are for the CPA exam. I'm not here to talk about advanced accounting, so I'm just oversimplifying a very complex situation. Step number 3, folks. You have to talk about the company car. So if needed, you get an auto loan or lease. You can even lease the vehicle. So a business auto loan, sometimes called a commercial auto loan, is actually a specific form of equipment financing that allows you to access low-cost capital to purchase cars or trucks, which then function as collateral for the loan itself. So you can see that I'm giving you ideas on how to get those loans without dispersing any personal asset or any cash yourself, okay? And this self-collateralizing setup makes it much easier to find a business auto loan without personal guarantee requirements. So overall, business auto loans are very similar to consumer auto loans, and although the rates and terms will vary based on the individual lender, these business loans are generally very affordable and accessible for businesses of all shapes, sizes, and operational histories. Okay, so you have national funding. Again, this is great for auto loans for startups and borrowers with bad credit. So here, the requirements: you only need 6 months in business and a credit score of over 575. So this is fantastic. And they can actually finance new or pre-owned equipment up to $150,000. And we love the fact that National Funding offers a simple online application with approval in as little as 24 hours. Fantastic. Then you have Balboa Capital. Okay, this is the second lender that takes care of startups and very young businesses. And this lender is faster when it comes to approving applications. They're faster than a bank. Okay, so Balboa Capital offers business auto loans ranging from $3,000 to $250,000 with terms as long as 5 years. And we love the fact that you only need to have at least 1 year in business, a minimum of $100,000 in annual revenue, and a decent FICO score. This is what they put on their website. It has to be decent. Don't ask me what decent means, but it means if you are in the 600, that's good already. Okay, so but when we talk about annual revenue, this can be projected. So if you're a startup and you're able to have a solid business plan where you are able to have projected financial statements that are done according to US GAAP and they're done professionally, you should be good to go. So I want you to see right now on the screen, the balance sheet on day 3 shows cash and office equipment on the asset sides. And you also have business vehicle on the asset sides and the corresponding items on the liabilities and owner's equity side. So I want you to take a look right now. So we are still complying with the fundamental accounting equation of assets equal to liabilities and owner's equity. You can see so we have 35,000, 35,000. Next, you want to think about machinery, okay? And the thing here is that depending on the industry you're in, you might need machinery. You can get equipment financing, anything other than office equipment. Okay, this is very important. And so we have 3 main players here, but national funding, in our view, is the best for startups and very young businesses. Okay, and so national funding, they are very good. I'll talk about national funding later on, but I first want to say it. Then you have Lendio, which is another great player, and then of course you have Balboa Capital. Okay, and we love Balboa Capital because again, here is a player who is very fast. They'll take care of you. They'll work with you. And we love the fact that Balboa is they're friendly to startups, even though their requirements is 1 year. If you're able to talk to a rep, if you're able to explain to them the solidity and the opportunity that you have in your business model, you can actually reduce that 1 year requirement to 3 months or 6 months. We have done it in the past for clients, and this is totally feasible, okay? But you need to have a compelling business plan. This is why I've been telling you a business plan is quintessential. And with Balboa Capital, you can get regular office equipment, but you can also get heavy equipment financed. Again, the maximum here is $250,000, okay? $250,000, that's the limit. And it has the terms up to 5 years. Up to 5 years, you get your money, no problem. Okay, so those are things you need to think about. And let me talk to you now about national funding equipment financing. So national funding is also good. You can get up to $150,000 for equipment that is crucial for running your business. It can be new or pre-owned. Okay, and with national funding, they cater to all kinds of businesses. If you're a startup, not a problem, okay? The process is painless. It's very fast. You can apply online or you can apply via email. They will assign someone to you to help you understand the process. And in terms of qualifications for equipment financing, 6 months in business, your FICO score over 575, and you need to have an equipment quote from a vendor. It's very important. So the steps are very clear. You apply. So you start with their online application is very, very, very simple. You connect, so they will assign you a funding specialist. Okay, they will talk to you, they'll look at your file, and they will have a conversation with you, and then you get funded. If everything checks out, you're good to go. So to kick off the process, you want to call 1-888-733-2383, 1-888-733-2383, and possible uses for office equipment financing from national funding include medical equipment financing, restaurant equipment financing, farm equipment loans and financing, construction equipment and financing. Okay, so you can see on the screen here, the balance sheet on day 4 shows cash and office equipment on the asset sides and the corresponding items on the liability and owner's equity side. And of course, we comply with the fundamental accounting equation. So we have total assets 80,000 and total liabilities and owner's equity 80,000. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Studio Kiwi Show. I'm still having a conversation with you about how to build business credit for no business without personal guarantee and no assets. Now, at this point, I want to talk to you about accounts receivable. And this is important that you need to grow sales. So once you have office equipment, once you have heavy equipment, all this kind of stuff, it's time that you start growing sales, because this is how you generate accounts receivable. Okay, one thing you need to do is you need to surround yourself with the right people. This is very important. If you're a startup owner, you need to surround yourself with the right people. By that I mean the salespeople, You want to have an accountant. You want to have somebody who, and if you can put a lawyer on a retainer. You don't have to hire them full time because that will just be too much for you. But it's important to surround yourself with the right people. Okay, you want to focus on established revenue sources. What I'm trying to say here is you want to actually find clients that will be paying you consistently for your products or services. So those are really important because when we talk about accounts receivable, we are talking about the quality and the quantity of accounts receivable. So, but the most important thing is the quality of the accounts receivable, and the quality has to do with the quality of the clients, the quality of the company that's buying from you. So, focus on established revenue sources. You want to also reduce your risks, so you want to start. You can start local, okay? Unless you are an Amazon entrepreneur, you can start local. Why are you trying to sell to the whole United States if you can't even you can even dominate your own local market? Start local, get yourself known locally, and then you can actually scale over time. This is how you reduce your risk, okay? You also want to be adaptable. It's very important that you are able to adapt yourself to market conditions. Market conditions are shifting all the time. We all know this is business, all right? This is business. This should not scare you. No, the market is changing. Well, adapt to it. You want to focus on your customer experience. It's important. Customer loyalty is going to make or break your business. Invest in yourself. Okay. You want to always think ahead because agility is an important quality for a startup. Okay. It's important to know what's going on in your industries. You want to also focus on social media. It's very important. It's all about letting the whole world know that you exist, your company exists. Attend networking events. You want to host local events if possible, and last but not the least, research your competitors. Okay, so this is important. This is how you build a business that can continually generate sales. Once you have the sales, now it's time to get financing from those sales. Okay, so we have several ways: money. We have several ways that you can get financing from your sales, and that's called accounts receivable financing. So you have AR finance. That this type of financing allows you to leverage your company's unpaid invoices to get the small business funding that you need. Also called invoice financing. This funding comes in the form of a loan or a line of credit with invoices acting as collateral. Okay, invoice factoring is a type of invoice financing where lenders will purchase your invoices in exchange for a cash advance. So you have two types. You have accounts receivable financing, and then you have accounts receivable factoring. Okay, very important. So you need to understand. You need to understand that. Let me give an example. A clothing manufacturer orders $1,000 in $1,000 from a textile company. So instead of requiring upfront payment, the textile company might extend terms and invoice the clothing manufacturer for the $1,000, given it 30 days to pay. So that's the net 30-day payment term. The $1,000 is considered part of the textile company's accounts receivable. Okay, it's an asset, and the textile company can use that invoice as collateral for a loan or line of credit. Or if using invoice factoring, sell the invoice to a financing company or factor in exchange for a cash advance, typically between 60% and 97% of the invoice's value. And it would receive the remaining amount minus the lender's fee when the clothing manufacturer paid its bill. So this is really important. So you got to make a decision whether or not accounts receivable financing is great for your business. This is actually the topic for another show, okay? But just know that with the accounts receivable financing, you have the opportunities for quick access to cash tied up in unpaid bills. Invoices are typically the only collateral required, and you can borrow against money already promised to your business. This is why the quality of your customers receivable is very, very important. Okay, you need to really think about that. There are other financing opportunities. You have invoice factoring, but you also have merchant cash advances. So merchant cash advances provide small businesses with an alternative funding program from traditional bank loans. So you would basically receive as a lump sum upfront some money from a merchant cash advance provider and repay the advance with a percentage of the business's sales. Okay, so all kinds of opportunities out there, all kinds of funding alternatives out there. So when we talk about basically funding, you're getting funding from your accounts receivable, there are some top layers I want you to consider. So you have a first, commercial credit. So this player is great for businesses looking to get the highest percentage of their receivables financed. You have fund through. This is what we believe is the best overall in terms of AR financing terms for small businesses. Then we have crest mark. In our view, this is the best funder for startup businesses. If you have a 1 month, 2 months operational history, you might want to consider crest mark. Then you have Lendio. So Lendio is great for comparison shopping. Lendio is a marketplace lender. You have Altline, great lender as well. You have Triumph Business Capital. So this is great if you're looking to manage your invoices. And we have RTS Financial, which is great for tracking, okay? And eCapital, which is great in general for small businesses. So assuming that you are able to make some sales and then able to turn those sales into additional financing, here is what your hypothetical balance sheet will look like at the end of day 5. So I want you to look at it. Look on the screen right now. So notice the introduction of the 30K accounts receivable accounts. Okay, so this is really important. And you also want to notice that there is a $15,000 prepaid expense account on the asset side. Finally, you want to notice on the liability side a give or take corresponding amount. So it's not really a one-to-one correlation here between the assets and liabilities, but you get the gist, okay? So this is how your final balance sheet will look like. How you're able to get business credit for a new business with barely any assets except the initial minimal cash that you invested. So I'm going to leave this on the screen for a few seconds, and I want you to let that information sink in. You can see here that we complied with the fundamental accounting equation. Total assets, $125,000, equal total liabilities and owner's equity, $125,000, okay? The bottom line here is that if you do this correctly, you should be able to finance everything. And remember that you need to have a business plan. You got to have a business plan. You got to have projected financial data. And again, unless you are an accountant yourself and you understand the intricacies of US GAAP, don't do it yourself. You want to outsource it. Okay, you want to hire a local CPA to do the job for you, and you want to hire a local business plan consultant to write you a compelling business plan. Thank you so much for your attention, folks. I really appreciate it. Today, I was talking to you about business credit for a new business without personal guarantee and with no asset also. So we talked about how you can actually finance your computer and other office equipment, how you can finance company car, how you can finance heavy machinery, and how you can get funding from your accounts receivable. Thank you so much for your attention. I'll talk to you another time, but until then, remember, stay marvelous.